Hello, and good morning. Welcome to the stream. Today I am joined by my friend Justin, Mr. Legendary Gold Trader, Mr. Golden Balls, and we are today going to cover some macroeconomics and sort of talk about how this impacts certainly the assets we are trading, crypto, how it impacts gold, and just how it impacts sort of the general trading environment and how you can understand what the data is and what it means, and then how to trade it. So, yeah, looking forward to getting into this one.
And there's a secondary thing. It's also how it impacts your life and how much you're paying for your mortgage and stuff like that, because it is all intrinsically linked.
Yeah, absolutely. That's the one thing I always loved about economics is that sort of really tangible effect. I remember my economics teacher said something to me that really stuck. He said, you've got two types of economics. You've got the economics that you see in the numbers and the data, and the economics that you see in your eyes in terms of your experiences and how you sort of see the world and how you see friends. I mean, a prime example, I think, is you might on the UK, for instance, go out on a Friday night and it's empty. And that's probably in itself an economic indicator of current disposable incomes and where we are. So I always found that really fascinating, just the two streams.
It was quite interesting this week in the news in general that they're going, the economic crisis is over. I'm like, is it? Is it? I'm not really sure it is. What have wages gone up to mitigate the issues on the increased cost of living? Don't think so. Has the cost of living come down?
No,
not according to my bills, but so I don't really get that. But
yeah, it's always a phrase that I always find quite amusing. It's when sort of people say inflation down, like, and they expect that to be resolve any sort of cost of living crisis when prices are still going up. Like, unless you've got deflation, prices are still going up. So it's a little bit it's a misleading.
It's slightly disingenuous for them to say that. Personally, I don't. But I'm sure they have some data to back it up. I'm sure they can't just make spurious claims to go, yes, this is the case. But to me, I'm not quite seeing it. But
no. You and me both. I think certainly from what I've been seeing from a data perspective and what everything feels like, things don't feel rosy. Things feel like they're in a sort of dangerous. Yeah. I think a bubble impact, but I think we're seeing some monumental shifts anyway in terms of sort of the appetite of investors. I think we'll cover it later, but I think the bond vigilantes are starting to admit that they're losing the battle, and I think we're seeing less and less interest in some of those markets, and obviously the impact that those have is fairly tangible to sort of everyday life. I think we hop straight in then. So so welcome to the macroeconomic masterclass. Hopefully you can take something good out of this. I think ultimately this session I wanted to cover sort of the world of macro and how it impacts, I think, mostly crypto, but I think sort of just trading and the economy in general. I know many of the people in this stream will be either traders, investors, or just general sort of people interested in crypto, and I think hopefully we can share some information that can help you sort of really learn and grow and better understand the space and how stuff moves just outside of purely wind, moon, and the like.
Wind, moon, yes.
Yeah, there's a lot more behind the scenes to 120k Bitcoin than just a lot of people.
But the thing is, people have this misconception, I think, if you're just talking about crypto, that it lives in its own sphere, and it really doesn't. It is very much part and parcel of normally at the end of the general macroeconomic cycle. And why is that? It's because it's a speculative risk asset. That's just when there's, obviously we'll get onto it in the actual charts and stuff, but speculative assets come in at the end when there's oversupply of money and people have taken profit from the traditional assets. So that's it. And so crypto in itself is the arse end donkey, and anyone that thinks it lives in its own world is sort of mistaken.
No, it's I think we certainly, and I think the charts will show it when we move on to it, is we've gotten to a point where I think there's a lot of people who don't know where to put their money, so I think from a capital allocation point of view, we've reached a point where it's pretty inefficient, like the allocation of capital we have globally now, because you've just got people trading at stupid valuations simply because there's very little other places to put in the market. I mean, I think Circle's a prime example. I mean, that thing's trading at something like 2,500 price earnings.
Yeah.
Which, given the FTSE 100 trades at an average, I think of about 18 price to earnings, it's a bit nuts. I think just to kick things off, so probably cover some definitions first, just so when Justin and I are using terms in this that you'll be able to understand. So I think the first term that you probably hear is GDP, so gross domestic product. Essentially, this is the sum of all the economic activity, either within a country for a country's GDP, within an area for an area's GDP, or globally GDP. And this is made up of multiple parts. So you've got private sector spending, but it also encompasses some public sector spending, which public sector spending is impacted by what is known in the US as government bonds, but more commonly in the UK is known as gilts. And this is essentially the rate in which governments can borrow money. It's a free floating rate dictated by the market, and ultimately is a quite a good barometer of the health of an economy.
Yes.
Which
it's almost, if you try and rationalise it to an individual, it's like your income that you get, and you go and try and get a mortgage off the back of it. That's basically what it is, and it's the definition of it. You break it down. It is a domestic product. What are you producing domestically? Basically, that values your economy rather than, and obviously someone that's that the higher GDP is, and you're a net, you're creating more internally, domestically within your country, the better. Prime example, what's happening at the moment with the US. They're trying to basically boost GDP by tariffs and all of that kind of stuff. Is exactly what they're trying to do, because then it enables your borrowing power and your financial freedom to be able to flex a bit more and play a few more shots.
Yeah, exactly. And I think certainly as well, you see that, and I'll touch on it when we go through the charts in the UK, but that's one of the real issues that I think Rachel Reeves has in the UK, is where, given the fact that I think about 40% of the UK's GDP comes from public sector spending, her fiscal rules, which are based upon GDP, essentially put her in a really difficult position, where if she cuts public sector spending, she also in turn cuts GDP, which lowers her fiscal headroom, which means she has to cut more. And it's that sort of self-perpetuating cycle. Yeah. And I've not got a particularly rosy outlook for the UK economy, but we can cover that.
We'll get to that later. A bit.
Yes. So moving on, so you've got interest rates. So interest rates, I know sort of people will be aware of the Fed and how they meet every 2 months to decide what the centralized rate should be. This rate's slightly different to government debt in the fact that this is the centralized rate. So this is the rate in which banks can borrow from the central bank, which in turn for consumer products like your mortgages is marked up on. The central bank, this is the only real tool that the central bank have to control their two objectives. So the two objectives of a central bank is to keep unemployment low and to keep inflation at a target rate of 2%. Now, obviously, we've had more than 2% inflation for quite a while, and we've obviously got high interest rates, which have been pulling that down. But we're still in a we're still in a pretty difficult place.
Well, the interest rate is the way they basically control the inflation. Right? That is one of the only control measures they've got of inflation. So you look at what could become of the Western world. Look at Japan. It's been negative inflation for years, and interest rates are always kept low. You have to pay to kind of pretty much keep money in the bank because of their economy. And I think that's what I genuinely think that Japan is the ghost of Christmas future for the Western world.
Yeah. I was chatting to someone about this the other day, actually. I mean, the interesting thing with Japan, though, as a case study is you've got what's really helped them sort of get through that time is that the patriotism that they have means that there's a lot of stringent rules around what about the businesses holding some of the government bonds, which is why you've got a lot of Japanese businesses holding some government bonds that I think if they were given the free choice, they probably wouldn't want to be holding.
But the thing is, it's its own little kind of, whilst it is a global player, they sit in their own little niche, their own bubble. Because, like I said, it's not like the draconian rule of, right, you've got to follow these rules. It's more of an implied kind of rule system because I used to do Japanese business. I almost moved to Japan at one point to set up an office out there, but I used to have a real job. And it's just a completely different culture. And it's very, very, very hard, I would say impossible, to replicate that in the free market in the Western world.
Yeah, 100%. It's an interesting case study, I think, as well, from a sort of producer materials point of view, because Japan has no natural resources. Everything's imported. It's very reliant on natural gas imports from Qatar and Russia and co. But yeah, the Japanese economy is a really sort of interesting case study, and I think it's something that makes me as a European quite worried that that's what will be.
But the thing is, as well, just slightly off topic as well, but it does all link into the macroeconomics. You also look at what a lot of Asia, especially developed Asia, is doing as well. Not China, but that's kind of catching on. Is the birth rates are just falling through the floor. So bearing in mind most government debt is borrowing against the future. That's based on your more people in the future to pay taxes and stuff like that. If you start getting negative population go, it can really start screwing with the projections and yields and then what you can borrow and stuff like that. And so you watch, I'm not going to be too controversial, but there's too many people on the planet, in my opinion. But you look at Elon Musk, some of his tweets was some of the common themes that he tweets about is people, we need to make sure we're repopulating the planet because he knows this stuff. And it literally, you look at South Korea particularly and Japan, it's what's happening. And even parts of Europe, it's happening as well. And that does have, if you're extrapolating out over a 30-year bond, for example, and your population starts growing, I mean, more people, your GDP's got to go up. Or people pay more taxes and stuff like that, and it will fail at some point.
Yeah. Yeah, especially when you've got quite a top-heavy welfare system as well. I know, obviously, I don't want to get too political, but we had.
Come on, let's get political.
All right, let's get political. Well, we had the big welfare issue. Certainly, I speak from a UK perspective in that bill. That was a bill that they were really keen to get some cuts in, some well-needed cuts, and obviously that has backfired on them. And I think that's a very big looming issue that I think will rear its head pretty aggressively, certainly in the next 10-20 years. That's a problem that's been pushed down the river for so long that it's about to go right off the edge of Niagara Falls without a life craft.
Which again is all part of this macro stuff, right? That there's so many different component parts that have been kicked down the road. There's only so long you can keep pushing that snowball down the hill before.
Yeah, exactly. It's, for me, the really annoying bit that I find that winds me up is when you hear politicians who talk about that so-and-so, that this will have to be paid for by so-and-so and paid for. It's paid for by borrowing. So it's paid for not by taxing people. It's paid for by debasing the currency for everyone else, which is why we've ended up in a period where you've got asset prices sky high compared to wages. And it's just, it's gotten to a point where personally now I think it's beyond the point of no return.
100% agree.
It's at the point now where it's managed decline in the same way that we saw Thatcher have the managed decline of certain northern areas after the industrial thing. It's how can we make this as least painful as possible as it goes on forever, but there's no way to stop it. There's no way to remedy it.
But again, we can come on to this a bit more about the whole fiat system in general. Shall we finish the
definitions?
The definitions first.
Yeah, we've gone off on a bit of a tangent there. So we've covered inflation, we've covered unemployment. What else do I have on my list? So from inflation, we've got various measures which we'll come to in that. Fiscal policy. So fiscal policy is basically government policy in terms of how they can control the economy, so whether that be through taxes, spending, etc. And you've got monetary policy, which is done from central banks. A deficit is the difference in what a government spends and what a government takes in. A negative, if a government makes more money, then it's a surplus. There's only a handful of nations on earth that actually do make a surplus. We've got business cycles, I think we've touched on. So things run the same way that you have the 4-year crypto cycle, which isn't really a cycle anymore. You have the same in business. So you've got the ISM, the business cycle, the sort of the boom and bust as we go through. And growth. So growth is essentially sort of how much an economy is growing. Typically, inflation is a little bit of a measure of growth, but it's measured in terms of that growth in GDP, which I think that's everything. Recession. So a recession is defined as 2 consecutive quarters of negative GDP growth, which the UK's just had one. So the UK could be in recession by the autumn, which is.
I think it will scrape through personally. But again, I won't go to my apocalyptic views quite just yet. We'll warm up to that.
I think that's everything. I think we can. So purchasing power parity is essentially another measure. So that's the value of what your pound buys, and that obviously is a measure of currency debasement,
and then people talk about money supply, so like the M2 and stuff like that, which is essentially how much money is floating around for people to invest in crypto and various other bits and pieces. It's free cash. That's basically, it's like having to at the end after you've been paid for the month and you've paid all your bills, it's your disposable income that you can go and invest with, or go and get drunk, or whatever it may be.
Yeah, it's yeah, right. So where should we start? Shall we start on speculative assets? And we can, yes, your favorite topic. So I will share a chart I have. If we have this, I was looking at this morning and zoomed out. So this is gold, and I think this perfectly encapsulates what a state we're in. But yeah, I mean, so talk us through, Justin, sort of how gold has gone from $200 a troy ounce all the way up to $3,500 per troy ounce in 30, 40 years.
Well, obviously ETFs was a big part of that, because if you're enable, you remove the barrier to entry effectively, rather than going to buy some gold, chuck it in your safe or whatnot. So that enables people to access the marketplace. Gold has always, I mean, our fiat currency for the most part was built off the back of holding physical gold.
The gold standard.
Where the world has fundamentally changed back at the start, when currency came about, instead of trading in gold and going to buy a goat or whatever it is with your gold, and you come up with currency to do that, you should deposit your gold into the bank. And if you put in $1,000 worth of gold, then you've got $1,000 worth of cash to go and play with. The issue has arisen where the actual where people are able to bet through derivatives or various other spread betting and stuff like that. You've taken a base asset that was 1-for-1 in the bank, that's now probably 30 times leveraged. And again, this is off the back of how wrong the fiat system is, and why the fiat system will eventually collapse, because it's based off of debt, and or ever increasing debt. So the reason, I mean, gold's run up a lot. It's always been a safe haven asset, because in theory, it's always had value. Yes, it goes up and down, but you've got a physical, not a finite asset, but it's not like you can go down the road and pick it up off the ground anymore. It's
it's an asset that you can exchange anywhere on the planet for a fair market price.
Yes. So it is that kind of, exactly that. It's something that's known by all. And what generally happens, and this is why I think we're in for a bit of a rude awakening, generally speaking, when we are in safer market times and people have got lots of cash, gold is going down in value, because people don't need to hold it, because they've got a lot more free money, and they can go into more speculative assets. And then when the world goes to shit, basically you then see a massive surge in the gold price, because people go, I'm going to go to the safe asset. So the general cycle, once you've had a market crash, and you're at the start, you're back at the bottom of the cycle, and people are going heavily into bonds and stuff like that, gold will probably start selling off at that point, and then you'll start seeing that rotation, which people obviously talk about quite a lot in the crypto space, where we're looking for rotation. So it'll go into bonds. I mean, if you look at a fund manager or your pension or whatever, they will have a split of assets to manage and to spread the risk. And the least speculative assets will be your government bonds and cash and stuff like that. And then you'll have a portion that's in the stock market, in the Nasdaq or in the S&P, then a portion in the FTSE. And then you might have the last 1 or 2% in some more leery assets. So gold specifically is front running, in my opinion, what will be a market crash in the not too distant future. And to me, the question is why. Obviously, bond, the whole cycle is out of kilter, in my opinion. I was talking to a banker friend yesterday, or a retired banker friend, and he was caught up with some of his ex-colleagues, and they were saying that everything's just completely skewed this time. And my personal view, the fact that you've had gold running, you've had the stock market running, everything's going at the same time. Bonds have been a bit meh. So you can see where the cash has gone from bonds into gold.
Yeah, because that was going to be my next point. Is I think we see gold has typically sort of been that counterbalance. I've always kept gold in my portfolio as a counterbalance. I always kept sort of 5% allocation of gold, so then I could always rebalance when things went out of kilter. And I think when we had COVID here and we had the big stock market run up, gold, we see a little bit of a cool off, but it remained really steady. Had this pull back, and then obviously we've got global turmoil with inflation, with wars, etc. But this is a pretty unprecedented run on gold, to run like that at the same time as the S&P.
Looks like the Nvidia chart. Basically.
That.
It's crazy.
That, or like that.
And it's outperformed the vast majority of TradFi over the last couple of years. So why is that? I have my views on it. I personally think the market cycle, if you like, the macro cycle, is delayed. Hence why everyone's been waiting for crypto to kick off. And going, what's happening? Oh my God, we're not going to have an alt coins, alt market, and all that kind of stuff. I think it's personally skewed because, not because we've got a risk or we've got a market crash coming, but I think it's skewed because I think this is the end of the cycle as we know it. Again, not to get too tinfoil hat.
The changing of the world order.
Yeah, well, we know that the fiat system is based on increasing debt, debasement of currency. Because everyone looks at inflation and go, right, when I go and get my pay rise at my job this year, the inflation is 2% and I've got 3%. Okay, right, I'm outperforming. But if you've then got another 5% that's debasement, you're getting ever more poorer. And that's why if you look at the housing market and stuff like that, and what people, that their earnings to average house price ratio has changed so much over the last 30 years. So whereas before it was like 4 times salary, 3 times salary, and you can buy pretty much a house, it's like 8, 9 times salary now to be able to buy a house. So your barrier to entry to get into the housing market, basically, you've taken 50% of the nation away. They'll never be able to buy a house. So, and then with that, you take away people. If you're in somewhere like Germany, where they've always had
that rental system.
But here you go, right, on average, most people retire with a 3-bed, semi-detached house, a little pension and a car. If you suddenly go, well, actually now that's 40, 50% of people, everyone's going to feel pretty pissed at that.
Mm.
It takes a few generations to work through to accept that that's the new norm. So I think there's a lot of potential turmoil there. But to get back on point, I think the cycle's finished. And I don't think fiat's just going to go collapse overnight. But is there any coincidence whatsoever that we've had for years and years and years, all of the major financial institutions basically going, crypto's a scam, crypto's this, it's used for sex trafficking, gun smuggling, all that kind of stuff, to then going, oh no, it's actually digital gold. We love this. So is that a coincidence, or is that a sign of what's to come? And I literally, in my office at home, I don't know why my background's gone off. In my office at home, I have Bloomberg on most of the time. And the amount of time a day they spend talking now about stable coins, for example, just completely change of...
Out of kilter, isn't it?
Out of kilter. So again, why is that? What's coming? What is the exact or the exact opposite of the fiat system? And it is a finite inflationary asset. And I'm not saying Bitcoin's the answer, but you've got finite supply and you've got it's open source. So you listen to some of the narratives of especially people like Elon Musk. What's important to him? Deregulation, open source, accessibility. It basically reading a white paper of what crypto is. So my personal view is the cycle's broken, and perhaps that whenever the next crash happens, that the new standard will be based off of gold and potentially Bitcoin as well.
Yeah. And whether you see stables backed by gold. I know I use those a lot. Certainly in my Swissborg account, I use, if I've got cash in there to keep, I won't keep it as USDT. I'll keep it as I've forgotten the name of it, but you know the gold tether, the gold tether dollar. Yeah.
So that's my view. Is you're going to have basically everything skewed. Is it coincidence that the big institutions are suddenly getting mass adoption? And I get the general kind of the narrative of, well, it's a non-correlating asset, it's blah, 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 blah. It's being done for a reason. And I genuinely believe that it will be the new standard of how currency is measured, or the new financial system is measured.
Yeah, almost that sort of fresh start.
Yeah, it needs a hard reset, because, like we were saying with other stuff before, you can't keep kicking the can down the road with the fiat. You can't keep going, I'm going to carry on borrowing money, and not expect any repercussions off the back of it, because you've got to service the debt. And so you need something that is the inverse of the fiat system. And I don't think it just goes overnight, right, we are now, everything's based on crypto. But I do believe that we're going to get, cash as it is in our society is being used less and less. We've got inflation, we've got debasement, and it's your. I've not got this for a prop, but you've got money that sits around, and that 200 quid or whatever that's sitting there, in 3 years' time, in true value, that might only be worth 180 or whatever, because they keep printing new stuff.
Yeah, you go to London and £20 just about gets you 2 pints now in the central London.
Yeah. So I think that there's big change generally coming, and again, this is why I think that the crypto altcoin season has not kicked off. I mean, if you look at the charts and you go, right, Bitcoin, I completely understand Bitcoin as a chart. Completely understand it. It makes perfect sense if you look on the high time frame.
So,
the weekly whiz or something like that, or the daily.
Yeah, that's a bad chart. I'll have to get my. Yeah.
So if it's genuinely meant by the institutions that Bitcoin is digital gold and therefore is going to be the new standard, then it makes sense that it's run up like this. And it also makes sense that if Bitcoin is the stable and the gold, altcoins are effectively your speculative assets. So it's like trading on the AIM market or SPACs and stuff like that. Hence why dominance has been so high, because the money hasn't been injected into the system because it hasn't been ready, because it's the speculative assets. It's not the time to kind of put money in there.
Yeah, I don't think I've got the AM chart, but yeah, that's similar. Yeah, so you see similar certainly with the Russell 2000 as well. It's just that sort of speculative. Yeah, and we can see the march. I mean, I've now just disclosed to the public all of the areas that I have longed Bitcoin. And I've not got my upper targets, but yeah, it's a beautiful chart, isn't it? I think.
Yeah,
I find it pretty nostalgic to look back, certainly on the high time frame, and you look through and like how rosy things are now and the difficult bits. And this bit, do you remember just this choppy range of death that we did so long
days or whatever it was? Yeah, it was the never-ending range of boringness. But it's, you know, I would challenge most people, not you, of course, but I wonder how many people in crypto genuinely look at anything other than the 15-minute or 1 hour chart on anything whatsoever. Whereas I spend my entire, I base all of my TA off the weekly charts. I do nothing lower down. I take trades lower down if I can be bothered, but it's all those high time frame, because contrary to probably what most people believe, all the big boys don't really look at the 15-minute charts. I'm pretty sure they don't care whatsoever. They might not even have that option on their screens to hit that button. But yeah, so it's that speculative time. You're seeing all the narratives come together. I mean, the stuff that people say, and just the nonsense that's kind of said about the tariffs, and people are going, "Oh my God, what's Trump doing?" Blah 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 blah, and all they're really trying to do is increase their spending power, and that's all they're doing. They're trying to boost GDP, trying to boost their spending power, so they can try and get, I would guess, ahead of the curve of what's to come. So obviously, when we have all cycles, contrary against what most people believe, highs and lows, when markets are going to crash, when markets are going to pump, that's not just, it's just organically happened. This stuff is planned years and years in advance. It's not just, people don't just wake up one day and go, I'm going to buy Bitcoin, or I'm going to push Bitcoin to this, or I'm going to push gold to that. It's meticulously planned. This cycle has been planned maybe for a decade or more of whenever the fiat system will end, or at least start transitioning.
Hmm.
And again, I think people look at the news and go, that narrative caused the stock market crash. It's not at all. These are all planned, and then it happens, like news happens to fit in at the right time to kind of suit the market, the actual cycle.
Yeah, agree. And I think, in all honesty, we probably could do with them. Like this chart, I think, for me, is just pretty astonishing. Just how little impact stuff on the world actually has on this. Like we look here, this was the financial crash. Was that COVID? Was that like it just Russia Ukraine? Was that? But then you had that week with the Trump tariff. This thing is just, when we talk about speculative assets and sort of where we're getting into bubble territory, this thing is pretty much, I would say, at a point where people just don't know where else to put money. We see gold at all-time highs. We've got this. I mean, bonds are pretty horrendous. I mean, I want to talk about this is my zoom in a little bit. This was my nice little view of sort of where the UK economy is at.
Yeah.
From a monthly, and this is scary for me. I find this scary.
Yeah. Well, it's topping out for sure, and it probably is not far off from that manipulation candle to the upside that hits into that supply zone. Effectively, if you're talking pure TA, that causes the big red candle.
Yeah.
And I've not looked at this chart. I'm just looking at it. Just what you're showing there. I'm pretty certain. But I mean, when was it? July 22, is it? Where we had that big impulse?
Yeah. So it was here. So December 2021.
Yeah. So that was about a year. That's when we're coming out of COVID.
Yeah. So that was sort of. Yeah, that was the end of COVID. I think when we were beginning to see some of the inflationary spikes.
Yeah.
And then that has just marched up. We see obviously Liz Truss and Kwasi Kwarteng there comes here, and a little bit of a pullback on Keir Starmer, but then this is, I mean, so in relative terms of where we've got it marked out. So we are really F zone is the spikes that we had in 2007 and 2008, which
coincided with the housing market.
Yeah.
And everyone flocks.
Yeah. It's even more damning, I think, on the 30-year. So if we zoom out here, we see where this is where I'm quite scared for the UK, because we see this is a massive gap.
Yeah.
You've got that there, and this has just been a really aggressive march up. And I think going on to sort of government debt, and one thing that I saw that was really interesting is one of the UK's superpowers used to be that a very high proportion of our government debt was done on what's called long dated yields, long dated coupons. So things like 20 and 30 years.
Yeah.
Typically in the US, you see a lot more focus on the 2, 5 and the 10.
Yeah.
The UK shifted far more now towards those really short-term bonds, just because I think COVID has really thrown that inflationary spike on the back of COVID. I likened it, actually. I said it's like if you buy a house that's never flooded before, the minute it floods once, your insurance is always going to be more expensive, because whilst it's unlikely to happen, it has happened. And so it showed something.
Yeah.
It showed something that can happen that previously had been assumed that either couldn't or would be very difficult to happen, is that sort of 11% inflation spike.
Yeah, it's I genuinely, if you look at where we're at, just looking at the end, probably from that spike up from Liz Truss, and then upwards from there, you've basically got this ascending wedge that's kind of going up. To me, if you're looking purely at technical analysis, screw the fundamentals, that whatever happens will happen. But that looks like to me that it's compressing upwards. It will have the spike into supply, and then you're going to see a big sell-off, basically. And what's that going to show? The massive crash that's going to be pending.
Yeah, exactly. Yeah, and so from a tangible impact point of view, from what these charts correlate to, a big sell-off in this chart will diminish the value of the pound. So that's sort of what you're looking at from the relationship of gilt. So we look at sort of British currency index has gone relatively stable, but this, I think, when we talk about what the orange man in the White House wants, this is a pretty this is a pretty horrendous chart, isn't it?
Yeah, well, it's, again, is there any coincidence in the run-up to the elections for that we've just been pushing the value of the dollar up? And if you look at how high it was, there wasn't much more room to the upside that it could go, unless you're literally, US is going to take over every single currency and just crush everything else, which it's not. So it had to come down. So again, everything is front run. And sell the news kind of event, or whatever the general bullshit bingo people play with stuff. Markets know what's going to happen, and everything's moved forward and put in position, and it will be moved into key parts of the chart in time for when a news event may happen. And then that's where you get the volume. It doesn't mean anything. Like, you watch when the news has happened on the low time frame on like the indices or gold and stuff like that, and then you suddenly, as soon as the news drops, everyone knows what the news is going to be anyway. The news drops, and then immediately, as soon as that second clicks over to news time, it just moves, like everything just suddenly moves. It's just, it doesn't mean anything. It's just engineered that way. But that's TA. That's not macro. But yes, to me, the S&P looks to me like it's going to have it's compressing for another push. Is my my thoughts. I wouldn't be surprised to see 6,600, 6,800. And then I think that might be the top.
Yeah.
And then you will see that coinciding with whatever the narrative is, where you're going to have a stock market crash.
Yeah. One thing I found really interesting, actually, sort of on that, in the sort of the crypto bills that went through the House yesterday, that I found really interesting, is digital asset firms underwent a different governance structure. And so if you're a digital asset firm listed on the New York Stock Exchange, you're then not governed by the SEC. Which, admittedly, I don't particularly like her, but I mean, that was a concern that Elizabeth Warren raised, and I think there's certainly our friend at Tesla doesn't have a particularly rosy relationship with the SEC.
He's been. The irony of this is, obviously, we've got some mutual friends that have some very good stories about life and whatnot. But the the SEC preach all of this kind of stuff of like, and have pinched Musk numerous times because of market manipulation or whatever. The manipulation that happens in the stock market is, and how complicit the regulators are, the rating agents, and have to watch The Big Short and the housing market of 2008 to know how bad it is. It's total nonsense. And so the fact that they're not getting regulated by it is quite funny in itself. But I also think it gives you a bit of a insight of what's to come with digital assets.
Yeah. I mean, the Wild West is becoming more in focus. It'll be really interesting, I think, to see how it evolves. But yeah, as we say, from a macro perspective, there's just a glut of money that's refusing to leave the system. That I think we're in an interesting point. I think the US is in a slightly different area, but I guess sort of from a UK perspective, as a UK citizen, we're reaching the point now where the bank is having to cut, not cutting because we're in a good position to cut.
Yeah.
And I think that's where for me it gets quite scary, is when they're not acting. They'll never say they're acting in an emergency because that would cause an almighty sell-off, but they're having to do things that they don't want to do in order to try and preserve
it's a
health.
position, isn't it? It's not they're not going like, we're doing this because this is the right thing to do. It's like, if we don't do something now, it's going to implode anyway. So, but it's just kicking the can down the road, right?
Yeah, absolutely. It's an interesting one. I think obviously we've discussed this upcoming market crash and sort of what will be the catalyst, but I think we are reaching a point where it feels like, from a macro perspective, it is at breaking point. There's so much strain on the system. It's, for me, the only question I have is what gives out first? Is it gilts? Is it asset prices? Is it inflation? Or is it just general consumption? I mean, consumption's battered.
What's scary for me personally is, it's not the fact that we're going to have a crash, because that's going to happen without question, because it's all part of the bust and boom nature of markets. It has to happen. The same way as you have animals, like the 20% of the animals that are born in probably the Sahara and stuff, and they're running around, get cold because they're not fit enough to survive. It's the same with governments. It's the same companies, employees, whatever.
It's that accountability, isn't it?
So it's something that's just going to will happen. So depending on what the trigger is, I have a little suspicion that it will be something to do with the Big Beautiful Bill and tariffs and something like that. Something's gone wrong, and that will be the trigger for it. And I can't remember what the average time frame is of where the global reserve currency stays with one currency. I know the US dollar is very, 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 very close to the end, or has surpassed the end of what is the traditional cycle.
Yeah.
And so again, that leads me to believe, right, what's next? But the scary thing, say something does happen with the US or whatever country, because it doesn't really matter what country it is. It could be, because everything's so entwined. Whether it's the UK, whether it's Japan, whether it's the US, if the bond market goes wrong and you get the surge that the market, that the charts are very much showing that you're going to get that surge into supply, which means it's going up, which means the chances of default are increasing because it's costing more and more to service just the service the debt, let alone kind of ease or reduce debt. So I think it'll be something like that, and it will also then lead to whatever the new reserve currency is, the new financial system or whatever. But the scary thing for me, to get back to that, is what do you do? Let's just, for argument's sake, right, the crypto market goes very nicely over the next how many months. We have a lovely alt season, everyone makes lots of money, which for the most part I think people deserve, who that are still engaged and committed to the space. But what do you do with your money once you go, right, I'm on a TP, right? What do you do then? I'm sitting on gazillions of stable coins that are all pegged to the US dollar. What happens if the US dollar starts crashing?
That's the issue.
And this is not just crypto related. It's, you think of anyone that's close to retirement age and they've got their pensions coming up. If this is going to go as bad as it is, and you have an evolution of the financial system, so where is safe to put the money?
I mean, ultimately for me, I think Bitcoin will always be the end goal. I think if I look at sort of where I'm looking at for the cycle and sort of how I'm playing profit taking, is it will probably be once we top out on Bitcoin. I mean, I've sold a lot of spot and whatnot, but it'll be for me. I'll probably use a coin margined position to just take the downside and just take the extra Bitcoin, because I just don't know what the point is in dollars.
Genuinely, I mean, it's not like you can go, right, I'm going to put all my pounds under the bed or whatever. It's what if there is a fiat collapse and people go, never going to happen. People said that about the housing market collapse. It's, in my opinion, it's due. So where do you put money? And for me personally, I think Raniere or Blockbro and I were talking about this the other day. I think they're probably the only safest place to put money is Bitcoin and physical gold. It's I know Blockbro and I were talking about making a vault of some description to store precious metals somewhere. But I don't know the answer, and it could be. So this is not intended to scaremonger people, but it's a realism of what's to come.
Yeah, and I think the metals thing is an interesting. I mean, you've obviously got gold. Looking at silver here, I mean, silver is on a charge. Copper is on a charge. Just these general sort of movements is, and we see it in commodities as well. I know sort of some of you will trade commodities, some of you may not, but we see it in commodities as well. When you have these inflationary spikes, that's how it really impacts. Oil, prime example. We sort of see, look, as that runs up. I've got some very weird commodities on my trading list here.
Nothing weird.
I've got my
frozen
OJ.
Frozen orange. Every time I see OJ and think about it, the only thing that I ever think of is trading places. It's frozen orange juice.
I nailed this one. I did so well on this one. I was quite happy to catch that.
Yeah.
I caught the bottom of pigs as well. For anyone in the Discord, I dropped this chart in, and my back test hit pretty perfectly. But yeah, we see it in enough about sort of pigs and orange juice, and all the sort of weird stuff that we trade. I think we're in a difficult bit. I think just wrapping it up, Justin. So I guess outlook from you. What do you see if you can sum up the outlook of what to expect from the macro environment over the next 6 months? How would you say, and what would you say to look out for?
I wouldn't say bit speculative assets. I expect parabolic surge.
Yeah.
And then people looking at news events and going, "Oh my God, what about the war in Ukraine or war in the Middle East?" And going, "Oh my God, this is..." All of that stuff is priced in. These are not kind of some feuds that are people are unaware of. Any stock market crash that we have is called a black swan event. And a black swan event is a black swan because it's unforeseen and unmodeled.
Yeah.
Whether it's a worldwide global pandemic, whether it's the couple of planes flying into the Twin Towers that trigger.
Yeah.
They're black swans. And
that reminds me.
There you go.
This is a great book. If anyone is interested to learn that.
We can turn this into a book club review as well, Wiz.
Yeah, I recently read a very, very good one. I don't know if you've read it, but it's called The Hour Between Dog and Wolf.
Right.
And it's like the psychology behind trading. So it went into they looked at sort of the psychology of some of the London bankers, etc., and sort of what differentiated the dog and the wolf, and sort of that. I found it really fascinating, like sort of that element of just risk taking and just being the predator.
So in summary, what I expect is speculative assets. I see a parabolic surge, and then the markers that people need to be looking at is exactly what you were saying. If we get that final push on the bonds into supply, into key macro supply zones, that could be your trigger for the crash. So as much as it's going to hurt some people, I see it as an opportunity. And I'm not talking about opportunity to press the short button as much as that is an opportunity. I see
from the ashes.
I see it as more, if we can hopefully thrive in the coming months, be sensible with hopefully getting out in decent profits, then to move your wealth into something that is somewhat insulated would be my advice. Because if we have a crash, in my opinion, this is going to be a bad one. Not like maybe Great Depression kind of things. It's going to be bad, because I think if I'm right, and it's the start of something new, it's going to take time for that to manifest. So we could be sitting in doldrums for quite a while. So put it in sensible assets, be cash rich, or liquid in stable assets, and then good companies, same as what happened in COVID, that are suddenly a 50% discount, are fundamentally still good companies, and it's good. They're then good to get into. So you look at your energy companies, you look at your commodity-based companies. Just buy. Wait for don't try and time the bottom like anything. Just let what is going to unfold. Then if it looks like you're starting to get some people piquing interest back in again, then start deploying into the stock market, because it won't be into crypto at that point, because it would again, you're in the speculative assets. Obviously not financial advice with
buy stuff that makes money.
Just don't balls it up, because I think if you take advantage of this next 6 months or so, and then are sensible, if you make a 5x, let's say, in the next few months, if you then wait for a stock market crash and invest smartly, you'll probably at least 2x your money from the bottom in traditional finance. So then you've basically turned your 5x into a 10x, or whatever that may
exactly.
be. So just greed is one of the 7 deadly sins, as I say many a time, for a reason.
Yeah. So, not in the gecko camp of greed is good.
No. Greed is good because it drives us on as humans and as a race.
Good in moderation.
But greed in moderation is good.
Yeah.
How about you? What's your thoughts on having listened to my summary? What's yours?
I'm very much the same. I think for me, I'm in a position where I think I'm quite ready now to be out of crypto. I'm waiting for a nice, like we were chatting before, I've got my bags packed. I'm ready for it to have sort of the big push up. We top out. And then I think it's just a chance to sort of take stock and rebuild. I've got a long list of stocks and things that I like that are at prices which I don't like. And I'm just waiting now for good companies that make money. Good companies that make money, whether that be oil companies, whether that be gas companies, whether that be nuclear energy, whether that be sort of really core infrastructure technology companies. I think I'm the same. I'm sort of waiting for that opportunity. I was saying to SMFC the other day that I'm sort of now at the bit where I'm taking profits on a lot of things, and I'm just waiting now for. I'm ready to be patient, be patient and wait for entries.
One final thought whilst I'm looking at the wizard stocks there. What about the Mag 7?
I mean,
what do you think will become of those in the event of a stock market crash and then subsequent recovery?
I think it's an interesting one, because I think certain Mag 7 companies will be fare better than others. Like where I think if I look at sort of the charts here, I think whilst Nvidia will have an almighty crash given the run up, I actually think Nvidia out of the Mag 7 will probably fare one of the best, given the fact that they actually have quite a lot of income. I'd be very worried about Apple, because I think Apple have made some very fundamental strategic mistakes and have become quite far behind. They've almost gone from a very much a position of power now down to a real worry. So if I get the Apple chart up here, I mean, I think we can already, like, we obviously saw the big sell off there, and it's really struggling to sort of motor back up. Like you look at, if I compare that to sort of the rebound that we saw on Nvidia, boom, straight up.
But what about AI? As obviously it is a major kind of major.
I think it'll be one of the most. I think it'll be one of the most deflationary things that we've ever seen in our lifetime. But it'll be deflationary in quite a scary way, in the fact that the cost of actually producing stuff will become so low that there's no there's no extra around it to go into governments to provide services. So I think ultimately, from a crash, I think, and the rebirth is, I think there'll be a serious conversation about what the role of the state is.
Yeah.
I think AI and the way we're moving, it's both. I think I said to Dave the other day, it's the scariest. It's both the scariest and the most exciting time ever, because look, from an entrepreneurship point of view, it's now the easiest time to ever launch a business because the execution is easy.
Yes.
Where it was previously difficult to execute, if you wanted to build an app, you had to go to you had to get these San Francisco developers or whatever. You pay them hundreds of thousands of dollars a year to produce all the code. You can produce an app fully coded on something like Lovable for $30 a month, and we like just the value of things is just going to fall so dramatically.
So that's my point. Like, if you rewind to like the early 2000s with the .com bubble, massive overvaluations of companies and stuff like that. Are we at the same point with the Mag 7 where they're incredibly overvalued, and therefore when, let's say there's a 60-70% drawdown on some of those companies, where do they ever bounce back to their highs?
I think it depends how much money is in the system, because I think we'll get to a point where I think we're very much approaching a point where AI and the applications on it will become so monopolized. I think Nvidia will own the entire, like people like Nvidia will just end up owning the entire chain. Yeah. And I think we're seeing it now, obviously, with Trump in the offices. I don't think that anyone's actually going to step in the way and block any mergers and acquisitions, or if they are, they just get around it in ways which don't get picked up. And I think we'll just see just that sheer consolidation. I think we'll see it certainly from a deal-making perspective. I can see us really, really doing a lot of M&A before any crash, because
so you think you'll be, which is generally part of the cycle, right? You get the M&A, the big get bigger.
Yeah.
You scoop up all of the smaller companies, and then it goes through that cycle, and then you get a whole rebirth of small companies again, and everyone wants to go from globalization to more localization.
Just scoop up the moat. I mean, Nvidia now has $4 trillion of stock that it can use to do mergers and acquisitions. Like, they could buy anything they wanted to. Google the same. Google obviously have just bought Windsurf. Well, actually, no, they've not bought Windsurf. They've got around the process by basically just buying the IP and hiring some people off it, but not buying the company.
You've seen like Zuckerberg's going absolutely gangbusters, purchasing people from OpenAI and stuff like that.
He poached someone, didn't he? For more, he poached someone for more than Ronaldo costs.
Yeah, they're giving like $300-400 million packages to people.
It's a gold rush.
Yes, exactly that. And what happens then? This is my point. The bubble will burst at some point, and at some point, also, it will get repriced.
Yeah.
And something new will come up, shiny and new will come along, where the money floods back into. And
I think that's the thing with AI that we're sort of at the beginning, is because it's the hot topic. There's so much readily available capital. Like, none of these companies, Nvidia are profitable, but you look at people like OpenAI. OpenAI aren't profitable. They're losing money hand over fist, and they're spending an absolute fortune.
Well, they're either, there's twofold. Either they are planning for what is to come and what the valuation of the company is down the line, 5 years down the line or whatever, or they're just swelling it out and will sell it.
Yeah.
Like the whole thing. And from my experience of M&A activity, and I've been part and parcel of some deals over the years. That's what they're gearing up to do. You'll see companies that will suddenly have a massive surge in investment in the business, or to ramp up their top line numbers, because they're just increasing the value per share to be able to then flog it on, or at least break up parts of it. So it's I just wonder if AI right now, the Mag 7, is it like the Mag 7 back in the day where you had like Intel, Compaq, or those kind of companies?
And that sort of changing of the guards, and whether it's, I think we see more of an infrastructure move. I mean, so I've spoken about this a lot with Dave. I'm selling it now, but Oracle was, when they moved into the AI infrastructure element, we can see sort of that. I think it was around here that they said that they were moving more into that sort of infrastructure layer.
Yeah.
They've signed a deal. I assume it's with, the open secret is that it's with OpenAI for lease of a data center for $30 billion a year on a 5-year contract. Which,
but the thing is, something like that, if whoever that is, they've then got 30 billion times 5, and then you can leverage your off the back of that because it's guaranteed income, and then your actual valuation, that 30 billion as a company that you're subbing that out for, the multiples that adds as value to your business is probably 10 times that. I don't know what the multiples are going for on tech, but I'd guarantee it'll probably be 10, 20 times multiple.
Yeah. Yeah, it wouldn't surprise me. It's not on here, but it's nuts. But for me, I'd focus on the
recurring income. People love that because it's just, you can just go, right, that's our guarantee. You know, that's paying for the bills every month, kind of thing. Yeah,
exactly. I'm showing all my entry zones for stuff here, but I'll be buying the absolute shit out of this again. Just focusing on the infrastructure, I think for me is, I think that, and I think energy. I think people don't realize just the sheer amount of energy. And one thing that I found really interesting is these tech companies, as they sort of have that strive to be green, is that they pay a premium for green electricity, which is why, as a theme, you're seeing nuclear really start to take off in the US. Massively.
Well, again, deregulation will come along, won't they, to be able to. The thing is, the amount of megawatts that people need to just service their business, because is vast. I wouldn't actually be surprised if you see some M&A or some JVs with these big tech companies buying into energy companies as well.
Yeah, 100. Well, there's the. So I've got. I probably shouldn't be showing my position on this on the screen, but these guys have been rumored to be signing a deal with OpenAI for a while. But like these sort of nuclear plays, and this. I think I did a whole video on sort of the AI miners. I think the miners, the crypto miners, will be, in my opinion, like so far ahead. I pretty much now am so condensed into the miners because they've got the mining opportunity and they've got the AI infrastructure opportunity, which is shown in stuff like Iron. This has been one of my best holdings. I mean, I was buying the shit out of it down here, but my ISA is nuts. I checked the other day, and my ISA in the last 6 months, my return on investment in my ISA is 102%, which I think probably lends itself to the type of stuff I buy. I'm not a type to put it into something that yields a 7% dividend every year, but
there's no point when you're, again, understanding risk. When you're younger, and I always talk to people about time horizon. Your time horizon is much greater. If you're 63 years old and you're going to retire in a few years, you can't afford to be as ballsy.
that's where you sort of de-risk, and that's where traditionally bonds have sat.
Yeah.
Now we're in a position where I think there's less demand for bonds, and bonds probably don't hold as much sway. So what's going to be?
But the thing is, people. Sorry to slightly change tack here. One of my least favourite subjects. This is in all of crypto. But the amount of people that I hear talk about, oh my God, Michael Saylor, why is he buying here? He hasn't got a clue what he's doing.
No.
First of all, he's borrowing the money from somewhere, and where he's borrowing the money from is not some 2-bit bank down the road, it's major institutions. If he's knowing how capital works and flows, and where you've got these institutional investors, their time horizon is not a scalp on a 5-minute chart. They're looking at their return on equity as it used to be 5 years, probably a 7-year play. So as long as Michael Saylor can service the debt, if his time horizons 5 years, 7 years, whatever, it don't really matter what the price of Bitcoin is now, because it's going to be infinitely more in probably 5-7 years' time. And this is where people, I don't want to say are fundamentally stupid, because that's a bit disingenuous, but so many people go on about it and they never, ever talk about what the time horizon is.
Yeah, for me, it's always been return on capital, and that's always sort of been like my thing is I've got horizons. If I don't know if I'm quite weird in what I do with it, but when I buy stocks, I set stop losses and I set take profits when I buy them.
Yeah.
I just because I think there's sort of natural upside targets, but I think it's.
But the thing is, it depends whether you're looking at it as a trade or an investment. There's two, because trades and investments are two very, 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 very different things.
Yeah.
And if you're hedge funds, right, their time horizon on most trades will be somewhere from a couple of days to 30 days when they're placing long shorts and whatever in the market. They will invest, but they're looking for that turnover of like, I'm just going to serve it in. And if you've got a hedge fund that's returning you 30 points a year, they don't really need to. If that's, what's that? If you've got 30 days, you've got 12 months, you need to do, what's that, 3% a month, essentially, without even compounding it. So I think people really should understand the difference between investing and trading, first and foremost.
Yeah.
You're completely right. If you go, right, I truly believe in this company and I think it's going to do whatever multiple, and I'm willing to sit on it for 30 years or 20 years, or especially if you're getting dividend stocks and stuff like that.
So I've got a pot aside that I use for that. So for me, it's always been natural resources and energy. So pretty much I've used that in terms of so I've got a pot of stocks that I have, mostly sort of energy companies like Canadian. There's a lot of Canadian energy companies in there. There's ConocoPhillips, who I quite like, but
CNRL and stuff like that.
Yeah, and sort of keeping that there. But I also have my pension very heavily weighted into natural resources and energy. So I allocated on my pension. My pension's about like 30% that, 30% real estate, and then the rest made up of stuff just for sort of the longer term stuff that I don't worry about that compounds. But I think for me, I'm typically more on, at least under Trump. Now that we have the market volatility, the idea of keeping more than I have to into something that's doing 7% a year, when I can buy a stock, hold it for a couple of weeks, and sell it for more.
Yeah.
I mean, I am, but I'd say like a lot.
It also depends on
being alert and being aware, and
it depends how much. Obviously, you've got time to do it. For a lot of people, where they haven't got to do it, buy stuff, sit on it for a long term, and don't touch it. If you're willing to be more hands-on, then completely right. I think, especially when it comes, one of the lessons I've learned and on my many sheets of lessons learned from the crypto cycle, it is almost like when you're buying spot investments, set TPs and set your stop or at least your invalidation points. And it doesn't matter about taking loss and stuff. Sometimes you can recycle that and then put elsewhere.
Yeah, I learned that on my altcoins. I think it was just a case of now I don't really. I know obviously there's a preach of self custody and things like that, but I find it now so much easier. Just if I know when I buy something, I know what price I want to get out of it.
Yeah.
I don't know how long it will take to reach there, but I know that I want to get out of it at some point. This is I mean, I'm showing all of my TPs here, but I don't think I'm a big enough streamer to make that worthwhile. But like, if I buy a stock, what I tend to do if there's a stock I like is I'll define a zone. I'll set it so that it'll just buy every day that it's in that zone. And I'll set my TPs. So this one, prime example, I had sort of a buy zone of $10 to $14. I'm about to hit my TP on this one actually.
Watch it rug live on the stream.
Oh, could you imagine? This is a really low cap one as well. I mean, this is like 600 million market cap. So, so this is.
But I think again, there's lots to learn in this thing, and you need, and I say it, having a very good friend and mentor in my blog pro and stuff. Have a plan for everything, and most people go right. I will on my trades. I'll have a stop loss. I'll have a TP. But spot, it's like, well, I just saw someone on crypto Twitter say it's going to go to a gazillion, so I'm gonna buy it and have no. That's why I'm going to TP.
Yeah,
and
it's ridiculous. The only advice I give for that, and what I would say is, take 50% out as soon as it hits 100%.
Yeah.
And then it's a free trade. Correct. Then it's a free trade. If it then you can kick yourself if it keeps going up and whatnot. But if you manage to get into something, get out of something with the same amount, and have some of it left over, it's just that sort of cap. For me, it's looking at things from a return on capital perspective. Is ultimately, if you don't think you can return more than 8% a year, buy an index fund. If you think you can get more than 8% a year, whether that be, I wouldn't say leverage, but it would be like you might look at riding up themes. I've always been quite a thematic investor. There's certain theme windows that I ride. So whether it be AI was always infrastructure and energy. You obviously have the war themes that we've had. You've got sort of technology, you've got crypto themes, but that sort of riding a theme, getting out of it and finding the next theme.
Yeah. But the thing is, if you put some money in something and you 2x it and you get out and it runs another, but then you can recycle that and you 2x it again. Well, you've done a 4x at that point, 2x it again. You're better off recycling, and it's less stressful as well. Trying to sit on something for long term, especially like crypto trades. Yeah,
it's not fun, but it's all about watching where it goes. This is quite amusing. I remember I advised Dave to buy some of this when it was I think $2.5–3, and I think Dave regrets a little bit that he took profit a little bit too early, but
but the thing is that you should never, if you take
profit, profit,
and you've then got more capital to play with on the next trade.
It's that blowing it up.
It's just Anyway,
That's a horrible
we've
chart.
gone more into trading now rather than.
Yeah, so I'm gonna go off before I keep divulging any more of my positions. And people come and try and take me out. That one's not hit TP yet either. So that's billions of dollars anyway. I'm a very small fish in the pond.
At the moment, only a matter of time for this.
Oh, anyway, we've got a bit over, so I'm gonna wrap that up. Thank you so much, Justin. I'd definitely like to have you on again. I've really enjoyed that. I hope everyone has found that quite useful. Be safe trading. Make sure you keep learning, keep reading, keep growing, and don't
understand the pond in which you're fishing is what I would say, because you don't need to know the ins and outs, but just understand whether you're a stock trader, whether you're a forex or investor or whatever, just understand the macro. It will help. I'm a macro guy. I always have been. Not just invest, just in general. I like to know the why, not just other people. Maybe ignorance is bliss. I don't know, but I think it would help most people just to understand a bit more about what goes on in the world.
Yeah, why stuff does what it does.
On that note, Wiz, pleasure, sir.
Pleasure. I'll keep an eye on this. Have you seen this? So this guy is aiming to become the Michael Saylor of Ethereum. so this could be the next MSDR. They are taking on a lot of debt to buy Ethereum, and obviously it's had a pretty tasty run. I mean, I'm up 200% on this. It's a pretty horrendous chart, but.
Well, then gaps in the charts. That's the other thing with stocks.
Yeah.
It's really hard to look at it on a low time frame. It just messes with your mind with all the gaps with the open and closes.
Yeah, it's all over the place. This one again, but then you look at opportunities to fill this in. I think we're going off topic here, but I flagged this one. I think in Stonksy Discord that I was buying in this zone.
Yeah.
Always opportunity in the market. We have massively overrun, but it's been a really fun stream.
Pleasure.
Thank you, Justin.
No worries. Cheers, Wiz. Have a lovely week.